Hello, this is George Sandman. I'm the founder and CEO of Growth Drive. And Growth Drive is a system used by business advisors to drive client profits, growth, and value. Now, we're also a community. Every week we get together to talk about all things business advisor, everything clients, cases, things we're seeing out in the world. Now, tune in here to this podcast, and you can join the conversation by scanning this QR code, passcode 867-5309. Jump into the conversation. Everyone's welcome. We're looking forward to having you. So here we go. On with the show.
Good morning, everyone.
Great.
Doing well. Does,
Joseph, I didn't know I was supposed to wear a hat today. Sorry. Why am I not hearing? Oh, we are hearing somebody. I'm like, is everybody muted? I have my speakers
No,
on.
you were muted. You were muted.
Good morning, everyone. How are you?
Good. Good. Excellent.
You never invite Claire to the meeting, George.
It's interesting you say that, and I don't want to discuss this in a public forum, but Claire will be attending these meetings in very, 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 very shortly.
Ah, very good.
And so, let's just leave that as the teaser.
Okay.
So
So you're saying Claire's a tease.
I am not touching that, and not with a.
The way George started out, I thought it was going to be a
Claire is
scam.
Claire is the smartest. But Claire sometimes, like yesterday, Claire out in the wild, I had to write a one-page briefing for a senior leader. It doesn't matter. Someone from whom I really wanted to matter. And I had Claire do it. And I've got to say, there was very little, even letting it sit all afternoon and going back to it a few times, there was very, very little I changed. I changed a couple of words. There was, other than that, she has gotten smart. Now, Claire in the lab is super smart, but yesterday, she hadn't done her homework and she tried to act like she had. Let's just put it that way. She completely ignored the hundreds of thousands of words, everything that she is armed with, and just gave me some. And luckily, it was when I was talking with the engineers, and we're measuring progress, and we're training, and we have a complete, we have a plan.
I'm pretty sure that I graduated from high school with turning in only 10% of my homework.
Well, she came back, but I asked her what the 3 dimensions. That's our test question. Like, that's the check-in. What are the 3 dimensions of growth? And she came back with. I'm like, first of all, I would expect a high schooler without access to the internet to give this answer. Second of all, it's not the right answer. So she's doing great, but we can't, let's get her. She's always got to show up. So
Perfection is not one of the things we've achieved yet.
Well, and it was, and as with all technology, it'll never be perfect, but we want to do a beta release to you guys, and it will be a beta, and put her in your hands inside Clarity. And some of the things she's doing are really astonishing, and some of the functionality we're building into her is absolutely unique in our industry.
Everybody.
And so anyway, I'm super excited.
Good.
Yes. And Paul, how have you been, man? It's early in the morning. Thanks for joining.
I've been great. It's early in the morning, and I will be here more often next year because the last year and a half I've been participating in a speaking club, and it meets on Tuesday morning. So December 9th is the only meeting I'm attending the remainder of this year, and I'm a speaker. I hope they'd let me know what the theme is so I can make sure that I come up with a good speech. So that's why I haven't been here, gentlemen.
Paul, talk to Claire.
Well, it's funny you say that, Eric. I'm helping an advisory firm is growing and wants to put in SOPs. So my phone rings. Hey, do you have anything? And my answer was ask Claire, and Claire did a pretty good job of coming up with common. Imagine if the six of us were going to operate together under a brand. She came up with pretty good SOPs. You know, they'd have to be workshopped as a group, but it was a pretty good first draft, and she did it in moments, right? So AI is it.
That is my favorite use for AI right now is to not start with a blank piece of paper.
Yeah. So it's not magic. It doesn't replace us. But
No.
it sure is helpful. It's just efficient. So
Yeah.
I talked to, I was at a cocktail party the other night, and lo and behold, I'm talking to a young man. I'm talking to two guys. One guy does human capital due diligence for private equity and hedge funds. Great. The other guy is pursuing a PhD in, say it with me, AI. There aren't many, right? So trying to
Not yet.
create a PhD program, you know, who's going to, you can imagine all of the problems. And it'd be like Marie Curie trying to get a PhD. And it's like, well, we're not sure that what you're doing is real. So anyhow, it was super interesting. That was a fascinating
That
conversation.
would be an interesting conversation. Yeah.
That went straight to Joseph Frasco's point. I believe it was last week. It was 2 weeks ago on this issue. I mean, we are thinking, guys, we as a community are thinking straight about, and not, you know, these are two people who are on the, I'm pointing like I'm still at the party. These are two people. Did I do it again? I'll cross my hands. It's my Irish mother waving her hands around.
These are two
It's
people.
not conformist. It's not conformist thinking. I think the conformist thinking is a little defeatist and fear driven. You know, I think we're thinking in a sane and healthy way about AI. And, you know,
Yeah.
of course. So I didn't want to make this week about AI. I'm just happy.
Let's make it about turkey.
Okay. I am not cooking a turkey. How's that? Sid and I tend to have. So who does turkey? And I love turkey, but who's cooking a turkey? All right, awesome. Ed, what are you doing for Thanksgiving?
We're doing ham, and I'm doing the cheesecake. My cheesecake is all the grandkids all sent me a note and said, "Please, Grandpa, make a cheesecake."
Cheesecake, heck yes. My favorite is so I love turkey, but by the time my sons, always when we got divorced, not defer, but my wife and I get along really well. She has a huge Thanksgiving with her, you know, with all y'alls. And so by the time the boys get to me, they've had like 3 turkeys, and they're ever since they were small, they're like, no more turkey, please. So our tradition is to do. It started with paella. We started making a big paella.
We do paella for Christmas.
Nice. It's outstanding, you know, and it's really
awesome. I love that.
Everybody participates. You know, I ask the boys what they want me to buy, and they buy it, and we all sort of have our part. Our quarter of this, and the paella pan is this big, so it's way too much food.
Yeah, you got a lot of.
Unless you have teenage sons, right?
Yeah,
paella, like turkey, is
with
great
it.
leftovers.
Oh,
Amen.
absolutely.
With that sofrito at the bottom. So that's our tradition, and we've kind of shifted into steaks because we've been traveling. There you go, Joseph. It's like
I was gonna say I've got 4 boys. They like a picture of the turkey, but they want their tomahawks on Thanksgiving.
Well,
They don't want to eat no turkey.
Commendable. I like that.
tomahawk is just, yeah. I like the way you think, Joseph. So, hey, Jemiah, how are you, man? Good morning.
Good morning, everybody. Good morning,
Hey,
guys. How
good
you doing?
morning.
Good morning.
Jemiah and I had 2 meetings yesterday. Thank you, man. I really appreciate your time.
Oh, me too, man. I appreciate it.
Yeah, we got into the weeds, and which is always fun. Yesterday was an interesting day. We're starting to hear some big outfits thinking about the whole market and starting to think that sort of the way we do, right? This is a huge market. This is a big opportunity. It's not a problem. And they want to help, and they recognize that it is a huge market that we're all needed. And it was so refreshing to hear that come out of a senior leader at a household name. The person who's making these decisions for a incredibly well-known company. It was a fun meeting. It was, and it's they have to see these big guys turning into the vision. Like, gosh, this is actually important, and to hear them talking about the national economy, which is a first, by the way, for me in these meetings. To talk about the impact that the middle market can have on the pre-middle market on our national economy is super refreshing. So,
George, what excites me so much about what we do, and I'm being broad in that aspect. We all do it a little differently, but broadly, what we do are two things. One, the demographics are absolutely in our favor. That there's a lot of need to grow and also ultimately to exit. Right, both things. But the second thing is that this isn't well defined. We're truly, and we've talked about this before, right? We're truly at the start of something rather than at the end of something. We're not the attorneys or the accountants that everything's been the same for 2,000 years, pretty much. The law changes a little bit, or this ruling changes a little bit, but it's basically the same thing. We're really at the cutting edge of something more like, as we've talked about many times, the start of movement from the stockbroker to the wealth manager. These are exciting times, and being in an entrepreneurial environment like that is so much fun.
100%, Eric. And it's interesting. Andy,
hi, Eric.
Hey, good morning, Andy. Across the water.
Yeah, well, I'm. It's a good evening from here. I'm in Abu Dhabi at the moment.
Oh, that's right. You were going to go to the family.
Yeah.
It's 8:10 in Mumbai. What time is it in Abu Dhabi?
It's quarter to seven in the evening.
6:45. Okay, so 2 hours. Got it.
Yeah.
Awesome. One of the conversations that I'd love to model this out, and I'm sure someone has, but if we have it, let's use rough numbers, the bandied about numbers, that $10 trillion transfer.
And I've heard as high as 14 or 15 now.
Yeah.
And the research seems to indicate, right, that we have approximately 2 trillion of capital, maybe as much as 3.9. But no matter how you measure it, let's take the high numbers, 14 to 3.9. You have 14 of supply and 3.9 and
seems like a $10 trillion shortfall.
Yeah, and it's not going to be good for. I hope it does not depress prices, M&A prices.
Yep.
I believe that there's always a focus on, and guys, I'm just thinking out loud, right? There's always a focus on quality, on high strategic capacity. And I'm wondering if we model out, if suddenly, let's say $3.9 trillion worth of businesses sell, and that 3.9 trillion goes into, it doesn't go under a mattress, right? That's always my argument about Elon Musk. I'm like, still, whoa. He doesn't have it in a cave. That money is invested. It is at work.
Right.
So it's the same for this 3.9, even though, 1,000 points alike. It's going to be interesting. I haven't even.
Yeah, I think
begun to
I think
model.
there are a number of things in that to unpack, right? And I think this will be an excellent discussion. And I know Joseph will jump in on this because he's got an interesting take on this kind of stuff too, right? But look, we all know not all businesses transact at all, right? Some of that 14 trillion will go away. It'll just disappear because people will shut their business down, or they'll walk away, or something tragic will happen, unfortunately, and they won't be prepared, and they'll get pennies on the dollar, right? And so that whole 14,000 isn't monetizable realistically, statistically.
And the oil well, right?
Right.
And
all those things.
Yeah.
That's my point. If you look at it statistically, if we look at history, if we looked at the value at any one time in history, we would see that 100% of that value doesn't get monetized over time, right? It just doesn't. And so statistically, let's just say we know that we know that about 1 in 5 businesses actually transact, right? So if you look at that with 10 or 15, you're talking about 2 or 3 trillion that actually will transact in a third party sort of way, right?
Yeah.
And then the other ones, what's going to happen to that? That's the real question, right? We know what history shows us. Now, how do we change what's happened in history to be a different result than we've seen before?
I think the thing I've seen this past week, Eric, I've had 2 emails from people that I worked with saying, can you help me identify growth drive opportunities? And they're both of these cases are the owners are in their 40s, mid 40s, and saying, I want to get the highest value I can. And I'm willing to work at least another 10 years or more, but I want to be working smart and not hard. So they want to figure out, how do we look at optimizing its value as the question they throw at me. And so my challenge during next week is to respond to these individuals and try to set up a communication. One started yesterday, but I told them I didn't have time to give you a lot yesterday. I said, I can send you a proposal, but I can't talk that much yet.
Yeah. Hey, Jemiah, hang 1 second and get to that. But just one interesting thing about the statement you just made, and let's all think about this. Yesterday's Wall Street Journal had an article about a guy who actually was a former Wall Street Journal employee. He was a writer for them, and he retired. And he and his wife both retired. She was a teacher. He worked for the Wall Street Journal. They had all these plans for retirement, and I think 3 or 4 years in, she got Alzheimer's, and their whole retirement changed. Their plan for what they were going to do for retirement changed, right? So you hear this all the time. I'm willing to work 10 more years, or I'm willing to do this. Yeah, but you're not in control of whether that's going to work out the way that you want it to work out.
Exactly.
Right? We all know this, but that's part of the message we got to get to people is you can say, well, I'll just do it longer, or I'll just do it this way. Okay, but you don't control all the variables in that, right?
Isn't that the old isn't there a saying, man plans, God laughs?
Yeah.
Yes, absolutely.
Exactly. Yeah, right.
That's a great point, Eric.
Yeah.
Jemiah,
you had your hand up, so
you can tell you're on different places on our Hollywood squares. I'm pointing this way, Eric's pointing that way.
No, just going to Edward's point of yours too, Eric. Something I've been finding out too, like from my generation, like the Gen X generation, and that they're starting to think of transition and succession a lot earlier. A lot of the ones I'm talking to don't want to work, to their 65, 65, 70 years old. So they're actually a little bit more educated on the process, but still don't know anything about it. And they're looking at either, like you said, second careers, second businesses, or just spending more time, caring about, instead of working 80 hours a week, spending more time with family or kids. But back to your point, they're still not, even through some of the conversations I had, they're still not considering those, what they call them, the 4 Ds and a B, the death, divorce, disagreement, and burnout. It's another one too, but they're still not considering, like, those are the factors you just can't control. So what best time to plant a tree is yesterday. So it just, how they say, it's just good business strategy to be ready or able to transition and optimize that value. So spot on, Edward and Eric, absolutely.
Let's be strategic and have a plan for the long term, but let's be realistic and realize that we don't control all the factors that go into it, and let's be ready if we have to pivot, right? That's really the answer. Is options are what we really want for our clients. We want to give them options, right? And the only way you get options is by being prepared for multiple things. And the only way that happens is not by sitting back and waiting for things to come at you, but by being proactive and actually being somewhat prepared. Can't be perfectly prepared because we don't know what's coming.
Well, I think, from my perspective, what I see on the street is that the market is going to evolve. First of all, I think the concept of what people traditionally call a complete exit, that's going to disappear. I can already see, even within the private equity markets, they have a real difficulty now selling assets to be able to create liquidity for their investors, which, in one way, I've actually seen two deals in private equity firms. They're discounting their assets by up to 20% to sell them off, right? And that's driven by returns. So that compound with the fact that everyone's kind of getting into this exit mode and transitioning out, another 10 trillion of assets that's going to be put into the market. I think that's going to depress prices. But I think at the end of the day, the model really is going to evolve to a perspective where people are going to look at their business as another asset in their investment portfolio. So, you're going to have an owner investor versus an owner operator. So they're going to extract themselves out of the business, have people running the business, but their business is now going to be another component in their investment portfolio, same way they would have stocks and bonds and other, assets in their holdings for their retirement. But I definitely see pricing pressure, and I think valuation is going to be focused on type of work that we do, which is really, okay, you have an investment asset. How do you maximize the return on that asset, and not so much focusing on, selling it. I think that's going to be under a lot of pressure in the next couple of years.
I'm in violent agreement, Eric. If I could inject just for one sec, because if we think about if you like, I'm out kind of like an ambassador traveling around the country, right? I'm going to all these conferences. One, the Accounting Today growth conference in San Diego. We had examples of private equity making investments, making an invest and hold position in accounting firms. Fascinating, right? Because they're looking for an annuity. And the same we see happening. Let's take Maloa Capital. His business model is to take a minority non-exit position and again create an annuity stream, and it's a hydraulic situation. It is a free market situation, guys. This is going to be fascinating. So, we're already seeing private equity react, or the private capital markets. Let's be bigger. The private capital markets react to some of these realities. Does that line up with what you're saying, Joseph?
Well, I can only speak. The answer is yes, but I can only speak to my personal position, which is I take minority positions in many small private companies. I don't buy out an entire business. It's rare, it's happened, but I don't generally buy out entire business. That's how I actually diversify in my portfolio. That's managing it from the perspective of what you can control in the public markets, because it's a subject to all kinds of regulatory issues and whatever and so on.
Joseph, I completely agree, and I think that this is a perfect example of where we can add value, not just thinking about the traditional ways to do things, but actually looking at new ways to look at things. I had a client, I don't think I've shared this on this call before, but I had a client that was that I went to see, and they had two divisions, and the one division was pretty traditional, and we could talk about that in all the traditional ways. The other division had one customer. They were an outsourced function for one customer, and they didn't know what to do with that. And people had approached them about a third-party sale, but they were going to take a huge haircut. People had approached them about doing an ESOP, but that didn't solve the problem because they had a contractual relationship with the customer, and the customer could have, I didn't get to the point where I reviewed the contract with them, but I'm betting that the contract said their relationship was non-transferable without the customer's approval, right? And so none of these things got the value out of the business that they wanted to get out. And we talked about it, and I finally said, there's a solution. And they said, no, nobody's been able to tell us a solution. And I said, no, there is. It's a joint venture. Sell them back half of it. Now you monetized half the business. You got better than you probably would have gotten on a third-party sale. And by the way, you now just locked in a permanent relationship that you can sell your half. And so the point is, you got to look at things differently. You got to look at the situation and solve that problem, not just apply the whether we argue there are 4 different kinds of exit or 8 kinds of different exit, or however you want to count them. Everybody wants to just apply the things that are there. And what we got to do is more working on the things that aren't there, right? Coming up with creative, innovative solutions to solve the client's actual problem.
Yeah. And
so I love what you're doing, Joseph. That's awesome. That's a totally different look at what's going on, right?
Yeah, I think as we talk, we get more insight and inventive. And Joseph, I like your idea. Andy, I'm sorry, I didn't mean to run over you.
No, continue. I mean, it's an interesting debate, because from a practical point of view and an execution point of view, for us as advisors, okay, we can talk strategically, but how does that play out in terms of actually working with clients and helping them? Well, for me, and I agree with Joe that with the abundance of dry powder, I think we will see prices depressed inevitably, because it's supply and demand, naturally supply and demand, and people are going to be far more picky, and that won't help in terms of pricing. But it means that for us as advisors, maybe in terms of our value chain, that we give more thought to the protect phase in order to help diversify, if you like, assets and start looking at personal assets and taking some of the business side into personal, and looking at how we can help our business owners do that, because there might be better returns for them. There might be better money in their pocket at the end of the day by building up the protect phase, not only to protect what they've got, but also to diversify their assets. So that's one thing. And then in terms of building, the building phase, and looking at scenario planning, for example, Eric, that's what we're talking about, giving our clients options. We can be far more agile. When you think about it in terms of scenario planning, it used to be, a real pain to go through scenarios, and you might do them once a year, maybe, and you build your 3 scenarios or more. Well, now with AI, time is compressed enormously from that annual to the quarterly. You can run a quarterly strategic look at the company every quarter. And you could do the same with scenario planning, so that you're being very agile in helping our clients be able to respond and pivot or do whatever we want to do very quickly, because now no longer is there a long planning phase to all of this anymore. It's compressed enormously. So we as advisors need to be alive to that and have a process, if you like, that takes them through a quarterly, if you want. And it could monthlies maybe too agile, but certainly quarterly, to look where we are from a strategic point of view, from a scenario planning point of view, from a protect point of view. We have the tools at our fingertips to be able to do that now and provide that sort of service to our clients.
I absolutely love it, Andy. And a comment and then a question. Comment unrelated, what you just said is spot on. And what AI will allow us to do, if we think back to Garth Tebay, guys, remember, many of you will remember Garth Tebay, right? He's a very, very experienced, a great guy, CPA, valuator, killer dude. Garth made the argument, and it's a good one, that businesses their objective should be to close their books every day. And that it takes the same amount of work. There's going to be institutional resistance, but it takes the same amount of work. Now, imagine a world in which AI, what's going to help us close our books every day? AI closes the books every day. And you every day, Andy, I think your point's a good one. It's the humans that are going to slow it down, because we will have an instant read on the health of the business. And we can, again, hashtag AI. If you imagine clarity connecting to just a couple of other things, and you can have an up to the minute health of the business, closed book. So that reality is coming. And Andy, I think you're right. We can pick up the tempo and focus a lot more energy on execution rather than on analysis. Comment.
And exactly. And if you then take what you've just said into building a scoreboard, which is a scoreboard that picks up this data every day and shows you where we are in terms of value, increase in strategic capacity for individual drivers or the group of drivers, then we've got this up to the minute information and therefore planning ability and agility, if you like, to not only protect but also to build in a much quicker cycle.
Yes. And I want to go down that rabbit hole, but I'd like to circle. I just want to have one more comment on the entire the market. My question is, I don't think Joseph is going to lower his. So we talk about supply and demand. It'll be interesting to see how that plays out here, because the assumption there is that the capital will lower its standards because there are so many companies out there. The danger is they won't, right? Which leaves a bunch of companies short of capital, short of exit options. And we're very inventive people, right? We'll sort this out. But I wonder, private equity may be willing to, let's just use, the private capital markets may be willing to take a minority non-exit position so that they can harvest cash, but they're not going to do that for a company that doesn't predictably and sustainably deliver cash. So I don't know if they'll drop. It'll be interesting to see if what happens in a down economy, which artificially inflates multiples, will continue to play as more and more businesses try to go to market. It's going to be fascinating, guys. And the question becomes, will capital lower its standards or not? Because they have an alternative, right? Their alternatives are to put their money in debt, even high risk debt. Their alternatives are to put their money in the public markets, right? This is not a closed biosphere. There are other options to put money to work. So just floating some ideas out there.
George, to the point before, does capital need to lower their standards? Because if there's 14 trillion of businesses available and there's only 4 trillion of capital, they can find the top businesses and get the return they want. The point is that the other 10 trillion of businesses are going to have trouble doing what they need to do.
Correct. And this may play out at the family level. It's fascinating, guys. But the bottom line is, if we can help $1 trillion of businesses increase strategic capacity in the 3 dimensions of growth, we will have gone a long way. That's 10%.
We may have moved some of the ones that are in the bottom, in the 3rd quartile up into the 2nd or 1st quartile and changed their trajectory.
Well, imagine a world in which the average business does not come in at a 54.1, but the average business comes in at a 60, 62.
Yeah, right.
Those are profoundly different numbers. It doesn't sound like a lot, but those are profoundly different numbers. So
yeah. I think the work that we do is going to become more important, but slightly from a different perspective. I think there's going to be a lot of disintermediation. When I spent a decade on Wall Street, and all the clients I had, it was, very, very common. They made their money, their business, and they got to a point where they couldn't really grow their business anymore. So what did they do? They took their cash, they bought real estate. And, they were looking for a certain return. And when they couldn't get, enough return anymore, the money went into cash. So, when I used to try and speak to them about, their investment portfolio, it was typically a very small component of their net worth. And their response was, why do I want to have my money in businesses that I don't understand, I can't control, I have no idea, what to do about it? So for the very wealthy people, what ended up happening was it created this market called private equity, right? Private equity and alternative investments, where they could be involved and have a bigger say on what's called institutional management of businesses. But I still see that model is also starting to break down. The traditional private equity model is not going to work for much longer, because all they're focused on is on returns. I would say even for someone, closer to Jemiah's age, there's a lot of social contract that's involved in investing today.
Yeah.
Right. So, people, the concept of just buying a business just for pure return, may be a model that's not going to work anymore. People are going to start looking at, okay, when I acquire a business, do I want to protect the legacy of the owner? The employers. We talked about this before. It's not just all about money. It's also about communities and people and
Yes.
social justice and so on and so forth. So I think there's a lot of disintermediation, but our position in that is going to become even more important because the owners are going to want to have someone who will be able to help them through the process to be able to make those decisions in terms of where do I put my money? Where am I going to get the best return? And, if it's on the public markets and you're dealing with private markets, well, they've got to go to someone who knows how to value, private market assets and entities and know whether or not this is a good business or not a good business.
And show those other values, Joseph, right?
Correct.
Because it's easy to look at the dollar value.
Right, the pure financial numbers, correct.
Correct. It's harder to look under the hood and see those other characteristics. Does it match with just like it's easy to look at somebody's resume and say, do they have this skill? It's harder to say, will they match it from a cultural standpoint with my organization?
Right. And let's be specific in terms of strategic capacity, right? People is a big component of it. The culture of the business, the people, yes, the company might be making a lot of money, but how is it with respect to you deal with its employees, with its customers, and so on and so forth? That that would be imputed or reflected in the growth drive process.
We're seeing people doing transactions primarily for the people now, right? They're going out and making acquisitions so they can get team members, so they can support their initiatives and their strategy. Jemiah, you had your hand up before. I want to make sure we get you in here.
No, man. I'm meeting up with Eric, my friend, is saying, man, these are the exact conversations I've been having. I met with a partner of mine. He's a buddy of mine, and what he does, he strictly works in the private markets between Atlanta, New York, and London. And one of the strategies he's doing is exactly what you both, that he's employing exactly what you both said. So I'll give an example of a current deal, and I changed the industry and all that stuff, but a current deal he's working on. He has an anesthesiologist practice in Wyoming that's doing $4 million in EBITDA. $4 million in EBITDA. They have about 12 locations, and they want to exit for $30 million. We had a conversation with them because me and him are learning ways to work together again, doing what I do as a value growth advisor and his knowledge and relationship that he built and continue to build in the private markets and private equity and consulting and the consulting world. But this person wants to sell for $30 million. He had a conversation. So his structure was the 50-50, six sets at the $4 million, $24 million. They get 12 cash, 12 earn out, all the other stuff. 5 years, buy them out completely. But he dug deeper and asked her why.
There we go.
The answer was, I thought I had to. Now this person is still young. They may be, I don't know if they're 50 yet. But they just thought because they had that many practice, they capped out at that EBITDA, that $4 million mark. My friend's company, his sweet number is 3 to 5 million. He gives them 3 to 5 years or whatever that he even works with company. So he told her, no, you don't have to. You haven't even had any other acquisition. These are all practices, one-off. Just this person that aren't involved in the day-to-day as much, but they love what they do. And just because they feel like they have to. So another option that he gave this person is the leveraged recap, where we give you 2 to 5x cash now, take a few chips off the table. We do some acquisitions, we do some other stuff, but we also help you grow, and you serve as the oil well, the chairman, this for the next 5 to 10 years. Get some chips off the table so you can create wealth in other ways and do some other things, get you off the table, completely as as you said, the oil well, and they said, "Oh, I didn't know I could do that." And so I truly believe that I may be far fetched, but just from some of these conversations and looking at it from a 1,000-foot view, that most most of my conversation that's been productive, and since I've called myself a value growth advisor, has been from uh, financial planning to wealth management has been the best conversations. Uh, Accountants have always been a funny bunch, but all those other advisors, but I don't know what it is. I haven't cracked the code yet, but I get it. They can't charge QB all that, but I really believe that, and I don't want to, I say trusted advisor, but I really believe we are going to become so pivotal that the wealth management company are not going to be able to get any assets up under management without us. The CPA is not going to be able to charge a QE because you got AI and he's saying doing this doing a quarterly, strategic capacity or strategic plan, or basically doing what Intuit QuickBooks was kind of helping them do to prepare for taxes, where they would kind of put it in there to help the CPA out so his work would be as hard. AI is not going to be able to do that quarterly for help with and entirely helping with being able to pivot. So once you get all that into play, they're only in or trusted, I really believe, is going to be us as the strategic capacity and helping them to even see the other way. Because again, no one wants to come in and help a company actually grow their value. They want the assets once it's a liquidity event. They want the billable hours once they're talking about an actual exit, so that way they can charge for the QOE and billable hours. And no one wants to do what we're doing, but what we're doing is the most important part for any of that to happen. And I believe the market is shifting to where although the ancillary companies, I don't think AI is going to take them out, but it's going to make it to where they're going to need that intermediary to help them actually get business, in my viewpoint. And maybe I'm being a little too optimistic, but I really believe that. So I was just saying, to all your points, man, you're 100% spot on with some of the conversations that I've been having here lately.
Jemai, I totally, I agree. The fundamental, if we think back, I made a comment early at the beginning of this call about, big players starting to think out, saying altruistic things, right? And at least leaning into that space. And I hope that's what we're working on, man. That's what we're working on. Garrison, you're being very, very quiet. Joe always waits to the end. So, Joe, you're in character. Garrison, you're freaking me out.
Well, no, I did have something.
Go ahead, Joe, please.
Oh, go, Joe. So we got owners, partners that one owner's interested in talking, other one is just didn't give him the time of day, and continuing on this year-long, multiple-year conversation. What's the best practices around trying to? I'm not sure they're exactly 50-50 partners, but they're fairly equal partners. Continue to get that one wants to have the conversation, the other one wants to put on the brakes. Any insights on how to? I mean, there's a multiple relationship, so I guess I could get specific, but I'm not sure that really germane to the conversation. But fighting that hesitant co-owner.
Two things come straight to mind. Number one, if there's too much friction, let it marinate, right? So like anytime you've got excess friction in the sales process, you have to be really careful about whether or not you decide to push hard, right? Because you're not a partner, right? So number one, that. Number two, where I would approach it is I would go outside of the current vertical sales process you're in, and I would start doing research to find out who has influence with that reluctant owner, who is somebody, but I would only do that, Joe, if number one, I had time, and I don't. Like, I've got more clients to work with than I can work with right now. And then number two, if I felt confident it would make a difference. I'm just saying, generally with me, if I see friction in the sales process, I say, hey, I just back out and move on, right? Because I only want to win stuff that is ROIs well for me, and extended arguments. Joe is nodding, but extended arguments with recalcitrant partners is totally unproductive for me. So like, but it's your time. Does that make sense what I'm saying, Joe?
Yep.
Yeah. And
That's
and Mike, I would echo that wholeheartedly. I was in a situation last year where we had two partners in terms of reluctance, and they wanted just totally different things. And what happened, it was very time consuming, very draining, took away from what we were doing with the business. And in the end, didn't turn out very well, because essentially what one of the owners wanted me to do was to do something that he couldn't do himself, and represent his point of view to the other co-shareholder. And it wasn't going to end well. It was not going to end well. So I eventually backed out, said, no, listen, if you don't have the balls to talk to your co-share, your shareholder, and deliver the message you want to deliver, don't use me to do that. That's just, it was just a horrible situation.
Joe, I'm going to jump in with just not a totally different view, but a little nuanced view from what they did. Twice now, I've helped business owners buy out their partner, and both times it's been slightly acrimonious to mostly acrimonious. And so I actually have found that to be really rewarding work, but hard, sloggy work. Hugely valuable. And ultimately, I enjoy it because I'm trying to be objective and solve both people's problems. But to do it well, you have to lean in and really work hard to find out and help them uncover what each person really wants. Because as we know, most of the time arguments come up because somebody doesn't want the other person to get what they want, or they think they're taking what is rightfully theirs, right? And if you can get in there and find out what's actually going on, and you can help pull that apart a little bit, you can actually have a win-win for both people. You can actually help them both get what they want, because they're not happy being in a relationship together if it's a separation that they're looking for, right? And so sort of like the divorce attorney, getting in there and helping figure it out, not creating more strife, but actually working to get a good resolution. Maybe mediator is a better example than divorce attorney, because divorce attorneys tend to at least in my experience, tend to actually make it worse, right? But mediating and actually getting that happen can be a really, really worthwhile thing. But I don't disagree with Mike's point that it takes a lot of effort and it consumes a lot.
Right.
But
the point I want to make about that real quick, 100% in agreement with Eric. The question of what I would do would be, am I already being paid? Like, am I on retainer and am I being paid to deliver results? Different conversation. If I'm not being paid and I have this friction, I'm out.
Yeah.
I am out. Like, so like, it's all
fair
about
point, Mike. I was taking the position that I can get.
I'm not disagreeing with you at all. Back to what Eric said, there are times when you collaborate. Eric and I, it was awesome. Eric and I had an opportunity to work together, a client. It became immediately apparent there was a personality conflict with one of the partners about me and about my style and my message, but we didn't lose the deal because Eric fit in naturally with them. He was a better fit. He's able to help them. It may circle back around, it may not, but there are sometimes where when you're collaborating, even whether it's in a growth drive thing like Eric and I were working together on, or with other professionals, the attorney, CPA, sometimes if you can identify that there might be a personality conflict, if one person removes himself early enough, it doesn't sabotage the entire deal. and it opens up other opportunities, but that's contextual. I just wanted to share that, Eric. I think it was appropriate. You don't mind that I shared that?
No, not at all. No.
Yeah.
Mike, you make a great point. I was looking at it from the point of I was already engaged in helping them. I didn't have to. I did have to sell, and I had to sell so that I could gain the trust of both of them to work as the mediator. But I didn't have to sell in the sense that I wasn't being compensated at all. I wasn't doing all this effort with no compensation. Honestly, the compensation got better because the complexity of the relationship drove higher value, and I was able to charge more. Right?
Yeah. Hey, George.
Right. Yeah.
Do you want me to bring up that point that you and I have been talking about?
Yes.
Okay. So, I want to circle back on this thing about us being more valuable as AI becomes more dominant. And I think that's only true with a small percentage of the prospective clients, because I am here to tell you what's going to happen within financial services, which is what all I've been working on for 30 years. They are undergoing massive fee compression. I just talked to anyways, I've got access at the top of the wirehouses and the independents. Bob Goldsmith is a close personal friend. I talk about this shit all the time. Fee compression means, this is what happens. Fee compression means that the big boys, you see this in contracting, you see this like Ferguson, you see it all the time. When the big boys see fee compression, they go find other fees, or they go down market and they displace the next level down. They are going to, and I'm telling you right now, they are going to use AI. I don't know what the timeline is, George, 12 months, 24 months. They are going to use AI internally to try and invalidate a growth driver or value advisor, saying, hey, we can do that within AI and we actually manage the money. They don't. I'm telling you, if you need to think about this, because financial advisors, there's only one way that you are not going to get wiped out by financial advisors. And that's if they perceive you as making them money, and not some esoteric random shit like I'm going to help you out 2 or 3 years from now. Literally use the protect value module like George designed it, with minimal input for me. Mainly, I want more, right? But use that protect value module to identify revenue, because if they don't perceive you as adding fee revenue, they will carve your ass out. I promise you that's going to happen.
It's happening.
100%. Like, I mean, you know what I'm saying, Joseph? Like these are I mean, anyways, so.
And by the way, that, just to your side, because one of the theses that we had was acquiring accounting firms and bookkeeping firms. And I will tell you that private equity is buying them out hand over fist. They're paying crazy amounts of money, and there's no logic from the investment side in terms of expecting a return. It's, to Mike's point, which is really to take them off the market.
Yes.
Get them off the market. They're getting rid of potential competition. It has nothing to do with anything else.
Yeah.
That makes total sense.
And
Thank you for that, Mike.
You're welcome. And individual people like us, unless you have positioned yourself correctly through content, through writing, through videos, through actual referrals given on purpose to financial advisors, you represent the greatest risk that they possess, right? Because most of us, if we don't understand this, come in saying, hey, let me mess with like my clients have lifetime values of $1 million or more per client. And you want to come in there and talk to them about how you're going to make them more money? No, you are a clear and present risk. I don't agree with that, because I know you all, I know our community, but you got to understand how they look at this, and they've got money and capital. It's, yeah.
Interesting.
So sorry, but I'm the reason I'm so passionate is I just got back from a room full of very high-end international company. And it, like, I'm telling you, they are going to do it. It'll start at the wirehouses, and then it's going to hit the independents. But I'm already starting to see it at the independents, Joseph. It scared me. I had a conversation with with a guy last week, and I was like, oh shit, this is 6 months ahead or 12 months ahead of what I expected. It's going to make me a crap ton of money.
Well, listen, I can tell you, I've had a handful of conversations with some of the larger M&A, and investment bankers, do some acquisitions. First of all, they won't even talk to you and offer you to take a look at the Sims unless you already, you're private equity backed and you're ready to do a transaction without a lot of due diligence. They're just buying them out left, right, and center. And it happened to me even literally 2 weeks ago, where I was looking to buy a specific firm. I reached out to the investment banker. I said, I want to take a look at the sim and set up a call. Next morning, I got a message that deal's they've already accepted LOI. So it was off the table in less than 24 hours. It's incredible. It's all incredible. By the way, Joe, to your point in terms of the two owners, one thing maybe just to keep in mind, the concept of transition from owner operator into owner investor, where he doesn't necessarily have to sell off his portion, but he can take a different position in the company. That might help solve some of the issues over there.
You think that's the identity problem, maybe,
Right.
Joseph?
Look, at the end of the day, everybody does what they do because they want the money to achieve some other goal. So if you have a conflict between the two partners, clearly they have two different financial goals, and for one, exiting might be a good reason, and the other one, he wants to stay in. So the question is, how do you make that work? It could be some form of transition from the way they operate in the business.
Joseph, you're hitting on exactly the point I was making. Go find out what they really want.
Right.
Often they're arguing the wrong argument, right? And you gotta peel the onion a few layers to find out what they really want, and then you can design a solution that gets everybody what they want, or nearly what they want, with a little bit of compromise, right?
Yeah, with the pain comes a threshold of payment.
Yes. That's a great point. Awesome, Joe. Thank
you.
We're gonna have to call these Lorenz moments or something. Like I think Joe had a stroke or something, because the last 6 months, bro, you have been on fire. Are you okay? Did something happen? Was there a medical intervention?
fire in a good way. But not that there was anything wrong, but
I'm telling you, man, something happened. You are crushing it. So, anyways, that was a compliment, by the way.
I'm pretty sure Joe really is AI.
No, he's definitely not AI.
Hey guys, we have 3 minutes left. Does anybody
Thank you guys for your input, and it was very fascinating to see it from a different perspective. When these are all this particular group of guys I know personally from high school, right? And if I'm more than likely I'm too close to the deal, right? They just personally don't, I see them out socially, their family, when the kids go to the pool, we go to, just this stuff that gets in the way, right? So
look at chat. We have Joe. We have been nominated to write a book. Is
poetry by Joe. All right,
and the schematics, man.
Anyways, you got a big game. Go Bucks over Michigan. Damn it, we got to beat these mothers.
Joseph, it's illustrated poetry because we got to have those, the drawings.
Yeah.
Outstanding. Outstanding.
Hey, George, can I just say this was a great meeting, not only for the topic, not only for the healthy discussion, but we had some people on the call that aren't often. Andy can't often make it. Jemiah's joining us now for the second time that I've seen him, right? And it was great to have the variety of people on. It wasn't just the same core characters that we always have, and that was awesome to have some input from some other people. Thank you, guys.
Yeah, absolutely. Yeah, these are great conversations. Anybody
and before you all go, I can't help but say I wish you all a happy Thanksgiving.
Yes,
thank you very much.
Thanksgiving.
Not that I know much about it, to be honest. There must be some historical context somewhere about that.
It was actually celebrated by the British, right? Because this is pre-revolution.
No, but happy Thanksgiving.
Yeah, thank you very
Thank you.
much, Andy. All right, guys. A great conversation. Thank you all. Have a great week. Happy
great
Thanksgiving.
week, gents.
If you're traveling, please be safe. And
you don't need to be safe if you're not traveling.
that's exactly right. Just light your house on fire. All right, guys. Thank you very much. And I'll see you all next Tuesday.
Garages are for turkey fryers.
Inside. You can do it in your living room. It'll be
Yeah, living room.
And you don't need to defrost the turkey.
My friend literally did burn his garage down. It
It's
was
like
a
a
separate
mortar.
building, luckily. Anyhow.
Take
All
care,
right,
folks.
guys. Listen,
Have a great weekend.
have a great celebration. Enjoy your families. And we'll talk to you next Tuesday.
Hasta la bye-bye.
Guys, next Tuesday.
Bye, guys. Thank you.